With shares rising by almost 172% over the past 12 months, Palantir Technologies has firmly established itself as one of the standout performers of 2025 within the rapidly expanding generative artificial intelligence software arena. This remarkable stock performance has pushed the company into the spotlight, drawing in both enthusiastic supporters and outspoken critics. Palantir's strong association with national security, government agencies, and defense-related initiatives has generated controversy over the years, yet that same identity has also helped cultivate a deeply loyal investor base. This combination of passionate belief in the company's mission and excitement around artificial intelligence innovation has likely fueled much of the recent surge in the share price. To evaluate whether this momentum can reasonably continue into 2026 and further into the future, it is important to look beyond the headlines and examine the company's history, business model, and competitive position. Although Palantir Technologies has only recently become a frequent topic of conversation among retail and institutional investors, the company itself has been operating for more than 2 decades. Founded in 2003, Palantir built its reputation by providing advanced data analytics capabilities to some of the most powerful and sensitive organizations in the world. Its early and ongoing relationships include clients such as the United States Department of Defense and the Central Intelligence Agency, placing the company at the center of high-stakes national security operations. Over the years, Palantir has been widely reported to have played a role in tracking down Osama bin Laden during the War on Terror. It has also assisted the first Trump administration with efforts related to undocumented migrant interdiction and deportation. These activities highlight the nature of Palantir's work, which often involves handling massive volumes of highly sensitive information in environments where accuracy, security, and speed are critical. At its core, Palantir's software as a service platforms are designed to analyze enormous data sets, identify meaningful patterns, and surface actionable insights that can guide decision-making at the highest levels of an organization. Traditionally, this process required specialized technical expertise, lengthy analysis cycles, and complex interfaces. The rise of generative artificial intelligence dramatically altered that equation. By integrating generative artificial intelligence capabilities, Palantir made its analytical tools faster, more flexible, and far more accessible to everyday users. Instead of relying on specialized teams to interpret data, operators can now interact with systems in real time, using simple prompts to generate insights, explore scenarios, and respond to rapidly changing conditions. This shift represents a fundamental change in how organizations can leverage their data, and it set the stage for Palantir's next major evolution. That evolution became concrete when Palantir unveiled its artificial intelligence platform. Since that launch date, the company's stock has climbed by over 2,000%, a staggering increase that signals extremely high expectations from the market. Investors appear to believe that the new generative artificial intelligence functionality could redefine Palantir's growth trajectory and expand its addressable market far beyond its traditional government roots. Early financial results suggest that this optimism is not entirely unfounded, at least in the near term. Palantir's third quarter earnings demonstrated just how impactful this shift has been. During that period, revenue jumped by 77% year over year, reaching $883 million. What makes this performance particularly notable is the source of that growth. Rather than being driven primarily by government contracts, the expansion was led by demand from United States commercial customers. The United States commercial segment surged by 121% year over year, generating $397 million in revenue and accounting for 44% of total sales. This marked a significant change in the company's revenue mix and signaled a broader transformation underway. Looking ahead, the United States commercial business is on track to become the majority contributor to Palantir's overall revenue within the next several quarters. On the surface, this diversification appears highly attractive, as it reduces dependence on government budgets and opens the door to a much larger pool of potential customers. However, this transition also introduces new challenges. By moving deeper into the commercial sector, Palantir is entering a far more competitive environment where many well-capitalized technology giants already operate. Historically, Palantir's strongest competitive advantage was its close relationship with government agencies. The company benefited from early backing by the venture capital arm of the Central Intelligence Agency and built a long track record of handling classified and mission-critical information. A significant portion of Palantir's workforce holds security clearances, and the company has repeatedly demonstrated its willingness to stand by controversial defense-related contracts even in the face of internal employee opposition. One notable example is the United States Army Maven Smart System Agreement, which was previously abandoned by Google following internal backlash. These factors helped create a powerful barrier to entry that few competitors could realistically overcome. In the commercial data analytics market, however, many of these advantages lose their relevance. Security clearances and government credibility do not necessarily translate into dominance in enterprise software. In this space, Palantir faces intense competition from established players such as Snowflake and Microsoft Fabric, both of which have extensive customer relationships, broad ecosystems, and substantial resources. Additionally, Palantir does not appear to possess a proprietary edge in large language models. Instead of developing its own foundational models, the artificial intelligence platform is designed to integrate with third-party large language models selected by clients including Grok, ChatGPT, and Claude. While this flexibility can be appealing, it also means Palantir is not uniquely differentiated at the model level. Despite these challenges, there is no denying that Palantir has positioned itself as one of the most visible beneficiaries of the artificial intelligence software boom. Its ability to rapidly deploy generative artificial intelligence tools across both government and commercial environments has driven strong revenue growth and captured investor attention. That said, it is important to separate admiration for the company's technology from an assessment of the stock as an investment. A high-quality business does not always equate to an attractive valuation, especially when expectations become excessive. This concern becomes especially apparent when examining Palantir's current valuation metrics. The stock is trading at a forward price-to-earnings ratio of 173, an extraordinarily high figure when compared to the Standard & Poor's 500 average of just 22. Such a premium implies years of sustained hypergrowth and near-flawless execution. Yet Palantir does not appear to possess a hidden competitive advantage or unique technological breakthrough that would clearly justify this level of optimism. While the company's devoted investor base and strong growth momentum make a sudden collapse less likely, the stock may struggle to deliver meaningful gains in 2026 and possibly beyond. Until earnings growth begins to catch up with expectations already embedded in the share price, performance could remain muted despite continued operational progress. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.